Welcome back to another financial update video. Just checking my audio here. It is the 2nd of September, 6:25 a.m. on Wednesday. And in gold-related news here on ZeroHedge.com, we have this. A former central banker. The world is heading towards a new monetary system that incorporates gold. When it comes to the development of the price of gold, it's important to know in what direction the international monetary system is evolving. For example, if gold is assigned a greater role in a forthcoming arrangement, not only will the price of gold rise while approaching that arrangement, the price increase will be sustained during that arrangement. According to my analysis, and this is written by Jan Nieuwenhuis of Weimar Gold, maybe a former central banker. According to their analysis, the world is heading towards a new monetary system that incorporates gold, although I do not know how that system will be structured. Yeah, because people understand that the debt-based economy cannot go on forever, and it's going to pop majorly, and people are going to want to get back to a sound money system, which is gold, usually, or something like that. To get a better perspective, I decided to interview Pentti Pikkarainen, former head of banking operations at the Central Bank of Finland, member of the Weimar Gold Advisory Board, and professor of practice at the University of Oulu in Finland. I'm just going to say P thinks we are moving towards a multi-reserve currency system. My interpretation of P's view is that the dollar will lose its primary status, and gold, the dollar, euro, yen, pound, renminbi will be competing each other. Probably. Oh god, every time I click the middle mouse button, I end up pushing on an ad. When I thought about this system, I remembered an article I published last January, quote, Hitting Zero, 700 Years of Declining Global Real Interest Rates. The article is about an academic study by Paul Schmelzing, who has shown that global real estate rates have been declining for 8 centuries, and the trend line was nearly hitting zero in 2018. That's a lot of data to be understanding something like that. Imagine all the research you had to put into figuring out the value of currencies going back 800 years. We're talking like medieval times, the Dark Ages, or the Light Ages, depending on your perspective. Noteworthy is that since 2018, nominal interest rates in advanced economies have declined, and the Federal Reserve, the most important central bank in the world, disclosed on August 27, 2020, that it will target higher inflation. Yes, I've been talking about that every day. Other central banks will likely follow this policy, so they're basically saying money printing is going to be the norm around the world, not just the US. Because of the massive debt overhang, it's impossible for central banks to raise nominal interest rates. Real interest rates will thus continue to plummet, as the chart above suggests. A huge factor that drives the gold price is real interest rates. See the chart below. U.S. real rates on the 10-year government bonds are shown on the left. Yada yada. Check out this graph if you want to. It's on Zero Hedge. Schmelzing was correct in predicting global real rates will continue to fall. He also wrote that real rates could soon enter permanently negative territory. In such a scenario, gold will be an essential store of value for citizens and a very popular reserve asset for central banks. Possibly, gold will be the sun in a new monetary cosmos. Yeah, I hope so. Let's see. The rest of the interview is a question and answer. I mean, it's literally the interview. Anything important here? Here's an interesting question. Do you think it was a mistake for Europe to launch the euro? His answer, it was a big mistake to start the euro area with a large number of countries. Moreover, the convergence criteria were not strictly applied. The euro was an experiment, and we should have been much more careful. We should have started with a small set of countries like Germany, France, Austria, Belgium, the Netherlands, and Luxembourg. The door should have been closed for other countries for at least 20 years. If the results of the experiment turned out positive, the door could have been opened slowly for new countries. That is, if the strict criteria would allow it. The convergence criteria should also include more variables like GDP per capita. Was the euro launched to break dollar dominance? That argument is partly true, but to challenge the dollar, the development of the euro had to be a great success, which it is not. Do you think the current international monetary system is sustainable? No. I believe that we are moving towards a multi-reserve currency system in which gold, the dollar, the euro, and other currencies take part. I am a great fan of the floating exchange rate regime. It usually works well for large and small economies. For many countries, a too rigid exchange rate regime is a problem. There are exceptions like Denmark. You guys read the rest of the question and answers here, but he's basically very bullish on gold. He's definitely thinking, this bubble's going to pop, and we cannot keep going as a debt-based economy, which is something that I've also been saying, right? I'm no expert, though. In crypto news, let's go. Ethereum hits 473, and currently it's sitting at 446, but it almost hit 500. And strategists are more bullish on ETH 2.0 than ever before. The price of Ethereum achieved 473 for the first time since June 2018, primarily buoyed by decentralized finance, aka DeFi. This time, the rally over Ethereum is driven by a noticeable spike in user activity, especially in the DeFi sector. Strategists, including Three Arrows Capital CEO Su Zhu, said this prospect of ETH 2.0 and staking are also improving. The DeFi market is growing at an unprecedented pace. Yes, it is. Be careful. It's kind of a bubble, in my opinion. Since August 1st, within a month, the total value locked in DeFi has more than doubled. Data from DeFi Pulse shows the total value locked across DeFi protocols hovers at 9.19 billion, hitting a record high. As the DeFi market began to expand, it caused mass withdrawals of ETH from exchanges. Users have started to send their ETH to DeFi platforms to stake or invest in DeFi governance tokens. Some speculated that the active usage of Ethereum in the DeFi space could harm ETH 2.0 and staking. ETH 2.0 is a major network upgrade that would bring Ethereum closer to a shift to a proof-of-stake consensus algorithm. It would allow users to stake their Ether to participate in the network and receive rewards. Since ETH 2.0 requires users to hold on to their ETH, skeptics said the massive spike in user activity in DeFi could cause problems for ETH 2.0. But a management consultant known as aftab.eth said it is a non-issue. He explained, people panicking that DeFi use of Ethereum is going to kill ETH2 staking are missing the point. Staking rewards could be raised to whatever is needed to incentivize participation. The fact there's so much demand for the productive use of Ethereum is actually very bullish for the proof of staking. Zhu, who leads a Singapore-based investment firm Three Arrows Capital, echoed a similar sentiment. He stated, quote, agree with this. Also, the fact that shit tons of Ethereum is getting withdrawn from exchanges and being used on-chain and DeFi raises DeFi raises average user proficiency levels immensely, which is bullish for decentralization of staking. The idea that everyone will stake on exchanges because ease is stale. Heading into 2021, the sentiment around Ethereum seemingly remains optimistic. The price of Ethereum is at a 2-year high. Daily transactions are approaching nearly the early 2018 levels, and the DeFi market is rapidly evolving. What's next for Ethereum? There are 2 key catalysts buoying the momentum of Ethereum, ETH 2.0 and DeFi. In the short to medium term, the 2 factors remain as persistent catalysts for Ethereum. Atop the fundamental strength of the ongoing Ethereum rally, declining exchange reserves and increased buying demand on major exchanges indicate growing momentum. Ethereum, currently ranked number 2 by CoinMarketCap, is up over 6.6% in the past 24 hours. Agreed, it is pumping. It's doing very well today. Gold is actually down, but not by much. Same with silver, but not by much. It looks like they are saying that it has a lot to do with the stock market rally. Yes, the stock market has been pumping, especially the tech sectors. It's been pretty big. I guess people, in my opinion, are probably just seeing the writing on the wall. Keeping your money in cash is going to be worth a lot less later this year and next year with the unbridling of inflation and money printing, hence movement to better stores of value like tech stocks, gold, and crypto. Anyway, gold and silver prices are down but well up for their overnight lows. An early U.S. trading Wednesday pressured by rising global stock markets, including new record highs in the U.S. NASDAQ and S&P 500. There is very little risk aversion in the marketplace at present, and that's bearish for the safe haven metals. October gold futures were down $7.90 at $1,962.60. Silver prices were last down 59 cents at $28.05 an ounce. It's a busy day for the U.S. economic data at midweek, with the highlight being the ADP national employment for August, which was just out and came in at up to 428,000, which is a big miss to the downside. Forecasts were for a rise of just over 1 million jobs. Gold and silver prices did par their overnight losses following the ADP report. This report precedes the Labor Department's employment situation that is due out Friday morning. Its non-farm payrolls numbers seen up around 1.3 million in August. Other U.S. economic data due for release Wednesday includes the weekly MBA mortgage application survey, the ISM New York report on businesses, manufacturer shipments and inventories, the Federal Reserve's Beige Book, and the weekly DOE liquid energy stocks report. Global stock markets were mostly higher overnight. The U.S. stock indexes are also pointed towards solidly higher openings when the New York day session begins. The NASDAQ and S&P 500 hit more record highs overnight. Yeah, I mean, I'm looking at it, and even pre-market, it looks like a straight arrow going up. There remains little risk aversion in the marketplace, despite history showing that can be a turbulent, despite history showing what can be a turbulent 2 months that lie ahead for the global stock and financial markets. At present, traders and investors are more focused on recent economic data from the world's major economies that has been generally better than market expectations. Yeah, agreed here. Let's see. The euro currency lost some ground overnight after hitting a 1.5 year high Tuesday. A central bank official on Wednesday expressed some concern about the appreciation of common currency against the US dollar. The important outside markets see NYMEX crude oil prices slightly higher and trading around 43 a barrel. Yada yada. Technically, the gold bulls still have the firm overall near-term technical advantage, and amid recently choppy trading, prices are still in an uptrend on the daily bar chart. Yep. So, folks, I'm definitely still saying gold is a great idea right now. Taking a look at the cryptocurrency prices, we had a big pump yesterday, so everything is just trending down, with the exception of Binance Coin, and Tron is up at almost 22%. Don't ask me why. I really don't get it. I think when he announces that he's going to announce something, it goes up. So it's all in the red for the most part. I bet you within 48 hours this all trends back green. That's my prediction. Let's see if it comes true. Thanks so much for listening, folks. That'll do it for today's video, and have a great day.